Thanks everyone. Welcome everyone to the Singapore Fintech Fest 2020 and inside Sygnum, the world's first digital asset bank. This is a very special occasion for us, not in the least that Sygnum was actually born in both Singapore and in Switzerland. So big shout out to Gerald Goh and our amazing team there in Singapore. As you heard, my name's Dom Castley, Sygnum Bank's Chief Marketing Officer and today's moderator. We have two very relevant and timely panels today. The first is why the time for bank-grade tokenization is now. And the second is Crypto Market Outlook 2021. So we have a short Q&A at the end of that second session. So please send us all of your questions via Teams, or they're already coming in via our live channel. We'd love to hear from you. So let's get started on panel one. So the first thing that comes to mind for most people in crypto assets is, of course, Bitcoin, then followed by Ethereum. But this is now slowly starting to change. With the advent of tokenization, the way that we invest is set to fundamentally change in the future. From being able to invest in 1/100th of a Picasso, a quarter of a shopping mall, or even a slice of a red-hot startup. This, we believe, will unlock a multi-trillion-dollar market in currently illiquid and hard-to-access assets, all powered in the background by DLT, which is really driving new levels of customer experience, transparency and efficiency. So as you've heard, introducing our panelists, Fabian Dorey, Acting Group CEO and Head of Asset Management. Hi, Fabian. And also joining us, Thomas Eichenberger, Sygnum Bank's Head of Business Units, who's also led the team that recently launched our end-to-end tokenization solution. Hi, Thomas. So the first question is going across to you, Thomas. Introduce our newly launched Desygnate, our primary market issuance platform, and also Synex, our secondary market trading facility, to the audience for starters.
Yes, happy to do so. I think first of all, I would like to say that we are really proud of our team that has managed to finally launch our end-to-end tokenization solution about 2 weeks ago. Seemingly endless hours of blood and sweat and tears, hard work, but even more importantly, brain power, have gone into our solution, and I think its launch really marks a huge milestone for us at Sygnum. Now, thinking about what it is really comprised of, I think you mentioned it already. It is essentially comprised of two components. A, Desygnate, a primary market token issuance platform that allows issuers to create digital tokens representing the ownership rights and the ownership itself in traditional securities and raise funds for it in a primary market deal. And B, it is comprised of Synex, a secondary market trading facility that allows the establishment of ongoing liquidity in such assets and also gives the investors the opportunity to either buy assets after their initial issuance or divest already existing asset token holdings in order to either realize gains or reallocate their investment portfolios.
Sure. And look, as we know, the potential market for tokenization is very wide. I mean, in theory, many things, financial, digital, virtual, can all be tokenized. So do you want to talk to us about our focus investment verticals, why we chose them, but also bring them to life with some examples?
Absolutely. I think we at Sygnum always strive to create the largest value add that we can create for our clients, be it on the issuer or on the investor side. In order to follow the principle, we have decided to initially focus on 4 particular investment verticals where we want to really unfold the potential of our tokenization solution. These are venture capital, mid-cap, real estate, and arts and collectibles. We believe that the pain points in all of these 4 areas on the issuer side, in terms of getting direct access to capital markets and access to also a functioning secondary market for such asset tokens, is really hard in the traditional space. And as such, tokenization can really resolve these pain points for them on the issuer side. On the investor side, we equally believe that these asset classes or the assets behind are currently hard to access and hardly investable for a broader spectrum of investors. And by tokenizing or by using tokenization as a means of creating more direct and more broader access to these asset classes, we believe we can really unfold the value. Right. Now, coming to a few of these examples, I believe you've mentioned them in the very beginning. In the venture capital vertical, we try to enable investments into startups, promising startups like Sygnum, like ourselves. I think in the real estate vertical, we try to enable fractional ownership in commercial or residential real estate property, for instance, or a football stadium or a shopping mall, like you mentioned in the beginning. And then finally, in the arts and collectibles vertical, we want to enable fractional ownership in a variety of dimensions, be it an Andy Warhol painting, be it an old-timer, a new-timer, or anything you could basically think of that fits into this arts and collectibles investment vertical.
Yeah. So Fabian, as you heard from Thomas, this platform is connecting issuers and investors on one platform cohesively. But zooming out, what does this mean, do you believe, for the way the financial markets will be structured and operating moving forward now we've got this?
Yeah. Well, first of all, I'm of course very much with Thomas in saying that the go live of Desygnate is a major milestone for Sygnum itself, one of which we can be very proud of. But maybe even more importantly, I truly believe that it is a major milestone for the digital asset industry itself. There have been, for quite some time, there have been many great actors around which in some way or the other already addressed one of the pain points when it comes to tokenization. But with our platform, at least to the best of our knowledge, it's really the first time that a fully regulated platform goes live that at the same time is seamlessly integrated into the already existing traditional banking infrastructure, and on the other side addresses the full value chain of tokenization. And I think that is really the beauty of our platform, right? It enables us to innovate across the whole value chain, be that on trading and issuance, be that on clearing and settlement, being on the asset servicing side. So all across the value chain, we have advancements, we have innovations. And at the same time, also truly believe that for users, be that investors, be that issuers, the convenience, the user experience is significantly improved as it is all in one place, integrated and readily available. So in that sense, maybe it's exaggerated, but I would say it's like the Apollo 11 mission, right? We are enabling to bring digital assets to the moon and safely back to issuers and investors.
Fantastic. So one for you, Thomas. I mean, coming back to earth about what people are talking about. Many will say that tokenization has been talked about for a very long time. And there's been a lot of talk and not a lot of action. So on a concrete level, what do you really think it means for issuers and investors? And what's new that they just couldn't do before?
Yeah, I think it's a very good question, and it's completely right. I think I don't want to go into the specific pain points that we're addressing, but I rather want to, focus on really the value proposition that we are now bringing to the market with our solution. I think what Fabian mentioned is really essential. If we expect issuers or investors to explore the area of tokenization, be it to raise capital or be it to find unique investment opportunities to allocate their investment money to, I think we have to give them very easy and convenient means at hand in order to do that. And at Sygnum, with our solution, we really finally have found a solution that is really coherent and cohesive across the entire value chain. So they don't have to source each of the individual components, such as the issuance aspect, the technical creation of a smart contract and the token, nor the custody solution, nor the secondary market trading facility. They no longer have to source that from individual providers, but they can just go to Sygnum and source that from one single point of contact, an expert, a specialist in that field. And I think that makes this step of entering into that space for both parties much easier than it used to be when they had to source that from different parties and do two steps in once. Once, overcome that hurdle to explore the space at all, and then secondly, find the right players across a variety of players that only cover one particular part of the value chain.
Yeah, as we see in many markets, simplicity is the key to getting adoption to new innovations as well. But looking, Fabian, from an industry point of view, there's been many recent, quite important announcements, and there's really clear momentum, both from the industry, but also established new players as well as from investors. So how does our solution, where does it fit in with this growing ecosystem for digital assets?
Yeah, very good point. Most likely, I mean, we're probably all dreaming of, so to say, creating and dominating the one and only digital asset exchange, right? But is that realistic? Probably not. I think the role that Sygnum plays is really the one of a spearhead, in the sense that we are innovating the space, be that the infrastructure, be that the services, be that the regulatory framework for it. So innovating in that sense and paving the way for the broader market and the larger players to follow suit. As Thomas was outlining, I think the focus of Sygnum is to enable the access to unique investment opportunities, which for the time being or in the past have been much more restricted to professional investors, to private investment networks, etc. And now with our solutions, with our verticals, we are enabling that access and bring liquidity into that area. But we truly believe that there is the need for complementary services, right? We more on the niche, on the innovative side, and then the established players who enter the market, for example, SDX, which bring the tokenization to the established, already liquid capital and equity markets. And I think for us at Sygnum, it will be very crucial to also closely work together with them, link our services, our platform with them to bring the market depth together. And that's the reason why we, of course, already now are very much so interacting with those players.
Fantastic, and certainly we packed a lot into just 10 minutes talking about the platform from the issuer and investor side, and also from the industry and the ecosystem side. So thank you guys very much for the panel. So moving on to our second panel now, which is our Crypto Market Outlook 2021. So I don't think anyone would argue that we didn't have a very eventful year in 2020. So certainly after the COVID risk-off in March, this has been Bitcoin's year. There's been a lot of hard-won momentum for Ethereum, long-awaited yield for investors via staking and baking is here, and also the rise of many interesting projects, DeFi, stablecoin, new platforms, and more. So our panel here has got the exciting task of analysing and looking back at year 2020, but also looking forward over the horizon for next year. So firstly, I'd like to introduce our Head of Brokerage, Dominic Lohberger. Hey, Dominic.
Thank you.
And also welcoming our Chief Clients Officer, Martin Berger. Hi, Martin.
Thank you.
So without further delay, let's jump into this panel. So Martin, why don't you get started by taking us on a tour of Sygnum's offerings to start with, so we can get oriented.
So we are a bank and we are a digital asset one-stop. Based on our heritage, the Swiss and Singaporean banking heritage, we offer traditional banking services for the emerging asset class of digital assets. What are traditional banking services? Traditional banking services are trading, so we offer 24/7 trading, best execution for anyone who places a trade within Sygnum Bank. We offer asset management services to optimize the yield of the digital asset custodized with Sygnum. We offer lending opportunities so that you can leverage your positions. We offer tokenization, we just learned about it in the last panel. And we offer all this also to other banks so that they can get access for their customers through Sygnum Bank. And all this in one account. I think that's the true innovation, that you don't need to switch between different players, but you have all these out of one account.
Great. Look, that's a great start. And certainly from the simplicity of everything in one account to the complex external worlds of markets. So Dominic, what can we expect the bull run? Can we expect the bull run to mirror what happened in 2017? So get us started on that one.
Yeah, 2017 definitely a very interesting time, but I think we have seen fundamental changes since 2017, and one of them certainly is the decreasing relative share of retail investors on the back of this run of professional traders into the digital asset space. And when I'm referring to professional traders here, I don't necessarily talk about the more conservative end, the private banks, the pension funds even, but I'm more referring to market makers, proprietary trading firms, hedge funds, which come from maybe a statistical arbitrage background on equities, and have now seen that there are opportunities in the digital asset space like there are none in the equity space anymore, and that there are really there's really potential to generate alpha here in this space. So fundamentally a different market segment that has entered since 2017. Then also the rise of the derivatives market, in particular in 2020, is responsible for quite a lot of the changes that we see in this underlying structure. Obviously, also then appealing to this professional trader segment. And we see now professional traders being able to trade options, trade futures, have access to hedging instruments and leverage much more conveniently than they had back in 2017. So that has fundamentally changed. We also see features like portfolio margining, which weren't given in 2017. We see new innovative products like hash rate futures, for example, being launched. So yeah, a lot of new instruments and infrastructure coming into this market recently. And then thirdly, one fundamental difference to 2017 is certainly the regulatory clampdown, or the clampdown in general on unregulated exchanges, offshore exchanges mostly, that we have seen in 2020, and also the strengthening of the position of regulated players, also the regulators themselves taking a more active position in regulating digital assets. And I think they have noticed, and it has dawned upon them, that digital assets are here to stay, and that they will become just another asset class with a more advanced technology.
Great. So for you, Martin, moving to staking. So what potential do you see in staking, especially when it comes from the move for Ethereum to proof of stake and their next stage?
I think staking is a game changer for the digital asset space, as well for the investors as for a financial services provider like we are, because it allows us to create yield-generating asset management products, for sure very attractive for investors, but also for the financial services industry as a whole. And I think for me, how I look at staking is, I rather see it not as a yield opportunity, but I see it as an opportunity to prevent inflation. So thanks to staking, you are not getting inflated. What does it mean, and why is it relevant for every one of us? And I want to give you like a data point. If we look at fiat assets, back in the 1966, I think the first Porsche 911 was released. The Porsche 911 in 1966 cost $10,000. The Porsche 911 in 2020 costs $120,000. So you get inflated with your fiat assets. Now, thanks to staking, if you hold a certain amount of Ether, if you own 5% of the Ether network, thanks to staking, you always keep the stake of 5%. You do not get inflated. Yeah. And I think this is, in the current economic environment, getting more and more relevant. 30% of the US dollar supply has been printed this year. So this inflation is something that we hear more and more often from our client base, and I think every one of us should be worried about it and should do something to hedge against these inflation risks. Digital assets and digital assets with staking are the perfect opportunity here.
Yeah. And you see this ongoing low yield environment continuing?
Well,
not going to
I
clear
think
up soon.
As many others, I don't see a way out of it in the next, in the short term or medium term at least.
Sure. Okay, so back to you, Dom. Looking into a crystal ball, what do you expect to dominate the headlines for crypto headlines in 2021?
Yeah, if we look back, or if the past couple of weeks are any indication to what's to come in 2021, there's definitely a very exciting year ahead of us. A lot of new opportunities popping up in the digital asset space. I think one element that will dominate the 2021 market will be the M&A activity among the players. I think that a lot of large institutionals that are considering moving into the digital asset space will wake up to realizing that that the infrastructure requirements and the know-how that they need to really build such an offering is not there yet. That will fundamentally lead to a strategic build versus buy decision. And on the back of that, I expect a lot of takeovers in this space. Then another point that is very exciting, especially also for Sygnum in 2021, is that we will see more regulators positioning themselves in the digital asset space. We have seen it with Switzerland, which is definitely at the forefront. We have seen it with Germany and Luxembourg here in the EU, taking a position in digital assets. And I think we'll see more and more regulators also using that to their benefit to position themselves. And then thirdly, I think this long-awaited, and we've been talking about this for quite a while, certainly since 2018, this long-awaited wave of institutionals moving into the digital asset space will manifest even more in 2021. We have seen, and we know obviously also from our client base, a lot of institutional players are preparing an offering. They needed that time to get ready. They needed to prepare everything. And now I think in 2021 we can expect a lot of new offerings, not necessarily only from banks or traditional financial players, but we also see tech companies wanting to take a stake in the financial world, and really as the boundaries start to blur between tech and finance, really be more active in that space. So exciting times ahead.
Absolutely. So Martin, also looking ahead, what part of the industry do you expect to kind of outperform everyone's expectations? I'd like you to touch on three of these: utility tokens, payment tokens, and security tokens. So what's your view on these?
I think the utility tokens, I'm quite bullish on them because they were a bit off the radar in 2020, I would say. But what I observed is many of the projects I'm closely following, they benefited from the hype. They collected quite a large amount of money back in 2017. Now they realized what they wanted to achieve through the blockchain technology takes a bit more time than they probably anticipated at the very beginning. But now they went back to the drawing board. They have now innovative solutions which start to work. We see more and more traffic on the Ethereum blockchain, on other blockchains as well. And I think many of them will have a good performance if you pick the right one in 2020. Then on the payment token side, I expect probably a bit the consolidation. We have many promising protocols there. Ethereum, the Bitcoin, but also new emerging ones, Tezos, Cardano. I think quite interesting what is going on there. And I think all of them are now competing for coders to build like layer 2 on them. And we will probably see who is the winner. End of 2021, we probably can see, is it Ethereum, is it the Tezos, is it the Cardano? So I expect some consolidation there and some more focus, some more clarity on who will be the winner for the future. And on the securities token, for sure, we just see an increase in volumes, in issued volumes, but we also need to have in mind that security token price determination follows the price determination for the underlying asset, like for an equity or a bond. So price-wise, I'm not the most bullish on this sector, but volume-wise, very bullish that we see more and more tokenized assets in 2021.
Okay. No, fantastic. So I think we can now start going to the questions. Thank you everybody for sending questions into the chat. So let's have a look. So we've got a question from Adrian. 2020 has been a year of strong Bitcoin headlines. Looking forward, will it continue to hog the headlines, or will Ethereum and altcoins start to make the front page? I think, Dominic, that one's for you.
Sure, yeah. Thanks, Adrian, for the question. I think it's a question ultimately at the fundamental level of the narrative of Bitcoin. And if we continue to see the narrative that has played out in 2020, which is the one less so of a payment token, but more of an actually an asset to invest in and a substitute to gold and the safe haven, really, then I think Bitcoin will continue to dominate the market. If we see the narrative shifting towards more of an application and technology focus, we will probably see the players that Martin has mentioned before, the Ethereums, the Cardanos, the Tezos, really playing a more active role here in the market and also dominating the headlines. Yeah.
Both, yeah. So I've got a question from you from Jennifer, Martin. So Bitcoin for some years has reached mass consciousness. I think my mum knows Bitcoin now, which is great. So it was original digital asset. It had a very simple narrative, she says. By contrast, Ethereum is more complex. Smart contracts, ERC20, proof of stake. So what do you think is a tipping point for Ethereum really coming into mass consciousness and realizing its value?
Thank you, Jennifer. Well, I do not expect like a specific tipping point. I think one of the potential tipping points could really be these staking capabilities that we see now, that like yield-seeking investors are really shifting towards Ethereum, which generates a certain yield. Other than that, I think we saw with Bitcoin that institutionals, they need time in order to adopt a new asset class. Now, Bitcoin is more than a decade old. Ethereum is now 5 to 6 years old, so it's comparatively new for institutionals. So I expect it to behave a little bit like waves. So probably now most of the inflows from institutionals are shifting into Bitcoin, and probably in 2021, 2022, we will see that the more tech-savvy ones of them, they start getting comfortable in investing into Ethereum. And if we look at how small the market cap of like an Ethereum or also other second generation blockchain protocols are, then this shift from institutional money into these small caps could lead to significant price increases across an Ethereum, a Cardano, or a Tezos, or Polkadot. So I think quite interesting times ahead for these smaller protocols and probably technically more attractive protocols.
Yeah, absolutely. So I've got a question from Mei-Lin in Singapore, one on trading. So she writes, a significantly increased demand for digital asset options versus a spot market seems to be happening. So what's behind this? Is this just increased activity from traders or a sign of more institutional investors getting interested?
Yeah, thanks, Mei-Lin.
Dom, I think.
Yeah, sure. So I think while one does not necessarily exclude the other, and we can also state that it doesn't really come as a surprise, to be honest, that the digital asset derivatives market has grown at the pace it has. I think it's the natural next progression in this market, the next step in the financial market infrastructure, and it's necessary to really provide the instruments that the professional traders need, professional portfolio managers need to be able to offer digital assets to their clients and hedge their risk, be able to take leveraged exposure, also allocate liquidity to this market more efficiently, more capital efficient. So as such, I mean, it's a progression that we have seen across a variety of different asset classes, spot markets moving first, then derivatives following, and also the complexity increasing. As such, I don't think it's a particularly surprising move. Nevertheless, we have seen most derivative platforms really skyrocketing now in 2020 and going, especially in November now, going really through the roof, and that's it's exciting to see also for what's in store for 2021. Yeah.
So I've got another one from you from Callum. So this is the $64 million question. What's our forecast for Bitcoin at the end of next year?
64 million, it is good.
Nice.
Yeah, so my personal opinion is that we'll see $50,000 to the Bitcoin at the end of next year. I think this is, I'm not a huge fan of these exorbitant predictions, but I think this is really one that we can take at this point. It's about 2 to 2.5x from where we are right now, significantly less than what we've seen this year and way less than what we have seen in 2017.
Sure.
So yeah.
A similar one from Greg. So this is a seemingly simple one. Will having Ethereum be a great Christmas present in 2021?
I think it is a great Christmas. I think digital assets in general are a great Christmas present. Whether you want to give like a Bitcoin for each of your children, grandchildren, 10 Ether for each of them, I think it's a great present, and they will appreciate in 10 years from now that they received this present in 2020, because the time is still early. So I think it's a great Christmas present.
Fantastic. So I think the last question we've got time for. We've got a question from Thomas. He's saying, I'm hooked. So where do I start? And then what are the key facts I need to think about when I'm approaching investing in digital assets? So why don't you start off on that one, Martin?
I think first and foremost, carefully choose the provider you enter the market. So do your research there. Not all the participants are, would say, credible in the market, so do your homework there. And then I would also recommend to enter this space in a diversified manner. So not put all your eggs in one basket, allocate some part of your portfolio probably in a Bitcoin, some others in altcoins, so that you have a diversified portfolio. These would be my 2 key recommendations if you want to enter the space.
Okay. You got anything to add there, Dominic? What do you believe?
Yeah, from a trading perspective, depending obviously on the size as well, try to average in. The market is not as liquid as many other markets that most investors are used to. So it's definitely a factor to consider. Also, be ready for some volatility, be ready for a wild ride, but a positive one. And welcome to the club, I would say. Yeah.
Absolutely. Look, thank you very much. Thank you also to all of our panelists, Fabian, Thomas, Martin and Dominic. It's been a super interesting session, packed a lot into just half an hour. Thank you everyone for coming inside Sygnum today. We wish everybody a happy, relaxing and of course a safe holiday period. To learn more about Sygnum, of course, please just visit our website. Contact us anytime at info@sygnum.com. And to be the first to hear Sygnum news on LinkedIn and Twitter, just follow us there. Also subscribe to our signature newsletter on our website. But in closing, thank you everybody for joining. Enjoy the rest of the Singapore Fintech Fest this year. Goodbye from Sygnum Bank here in Zurich, and see you next year.